Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello and welcome back to another edition of our Top Stock Picks of the Week program. I'm Ryan McQueeney, joined by Tracey Ryniec, my lovely colleague.
Yes.
Tracey, it's crazy cold, crazy windy, crazy snowy in Chicago, but we're here to do the top stock picks of the week.
Would not be denied.
Amazing. So it's an extra special, extra snowy one, but we'll have you start us off. What's your top stock this week?
My top stock is Sony, ticker SNE. A lot of people ignore Sony. I'm always kind of surprised by this. It's kind of a hidden gem value stock. It's trading at only 9 times right now. Did sell off at the end of December when everything else was selling off, so it's cheaper than ever. Hasn't reported yet, though. We're not going to hear from them until February 1st, so that's coming up soon. And so you're going to want to watch and see what they say there. But they've been reporting real good numbers all last year. They've really turned things around. They did close finally on their big deal for EMI Publishing. They owned a part of it already. They closed on the rest of it. They're now the #1 in the world publisher of music. So that's a big deal. That kind of reminds me a little bit of Apple's services business, where you get this steady stream of income coming in a popular area. But they also have gaming. They've got the PlayStation. We're coming off of the holiday quarter. I'll be interested to see how that does. The movies, it's been an improvement, but it's always hit or miss every quarter for them.
Such is the business.
Yeah, and an area that should be watched, though, is the smartphones, because Apple's not the only one with issues with smartphones, because Sony's smartphone just never has taken off. Sure. And a lot of the analysts believe they should just shut down that business altogether, quit taking losses in it, and move on. We'll see if they eventually come to that conclusion, but the rest of the business humming along really well. Like it a lot here. It does have the earnings growth this year in fiscal 2019, but we're going to be moving into fiscal 2020. It's showing a decline of about 5% for that year, but they're always so conservative on their guidance. Sure. And the analysts always keep saying that with Sony, you got to, it's steady Eddie. They're going to guide a little lower, then it's going to be better than expected. So some of those estimates are starting to creep up because analysts don't really believe Sony either. So I like Sony here. I own it in the value investor portfolio, and I've owned it for a while, but since it's pulled back, it's a deal once again. So
yeah, it's got its hands in a little bit of everything that you look for from a diversified tech company these days, from the hardware that you mentioned to the media that you mentioned, and just feels like there's still a lot of companies looking to get that much exposure to all these different businesses. So he's had it for years.
Yes, yes, and they're, like I said, kind of hidden gem because they are a Japanese company and people forget about them. But they should be taking a look now.
Put some respect on Sony's name.
That's right.
All right, so I'm going to do another tech company, a bit different, a bit of a different type of tech company, but iRobot. Pretty well followed company in this kind of greater automation and robotic space. It's one of the only pure plays that you can buy right now where you're getting exposure to the in-home robotics industry, which is obviously something that we have these dreams can grow into something amazing.
We do.
But iRobot, with the technology available to us now, has really cornered the market on these household automated vacuum cleaners and little mop machines. Keep your house clean while you're not even there. And they've done that for years, and they've done it well for years. It's interesting because they're reporting next week. We're looking for 51 cents a share in earnings, which is actually down a little bit. Okay. Revenue growth, though, coming in at 16% based on the current Zacks consensus estimate. Of course, top stock picks of the week. We have the earnings report next week. I do want to say
could
definitely change. It's always a risk to play a stock ahead of earnings. And the reason I'm interested is more of a long-term type of play anyway.
Okay, same with Sony.
Yes, and for 2019, the Zacks consensus is up 3 cents a share in just the past week. EPS growth expected to finish around 52% for fiscal 2018, looking for an additional 8% growth in 2019 right now. The other thing I wanted to mention in terms of the recency of new estimates, we have a little thing on the Zacks.com website called the most accurate estimate. Typically, that's a way that we look for stocks that are likely to beat earnings estimates right ahead of the report. If your most accurate estimate, which only looks at the most recent analyst estimates is higher than the consensus. We know the newer ones have been higher, which is a bullish indicator.
Right.
The other way that you can look at it is exactly that way, but not kind of applying it to, is it going to surprise, looking at the full year estimates and seeing, hey, analysts, the most recent analyst estimates are higher. That's a pretty good sign. That means we're headed in the right direction.
Yes.
The most recent, or the most accurate estimate for iRobots 2019 is all the way up at $3.01 per share. That's 10 cents higher than the consensus right now. I think that's a really good sign as we head further into fiscal 2019. Yeah. And then the valuation. This is a growth stock, as I mentioned.
Right.
But it's not crazy off the charts with the valuation right now. On a forward 12-month basis, trading on about 29 times earnings. That's below its average over the past year, and right just off the low it's been trading at over the past year. So compared to itself, you're getting it at a reasonable valuation right now. Then when you look at something like a PEG ratio, where you're factoring in that earnings growth opportunity, trading with a PEG of 1.4, that's actually a really noticeable discount to its industry average right now. So I think you could build like some kind of a value case here too. It's not crazy.
Was this one of the growth stocks that really pulled back in 2018?
Yeah, so it's a bit choppy, and it was choppiness that I think some investors had kind of forgotten was possible within iRobot, because it does have a pretty solid long-term chart. But yeah, I mean, it was rocky for all these types of growth stocks. I believe mid 2018, I think iRobot had potentially readjust the guidance, and we didn't respond well to that. So that could be why you're seeing a more reasonable valuation than you have in the past year or so. Especially, the stock pulling back a little bit while the earnings estimates are moving higher. It's a quick way to have that valuation shrink a little bit.
Yeah, for sure.
So I like iRobot for the long term, especially for 2019. But I think this is a company that long term already been doing something really well, should continue to benefit as the technology gets better.
What's the ticker there?
IRBT.
Okay.
What's the ticker for Sony, did we say?
SNE, we did say.
Okay, good. All right, well, I think that does it.
Yeah.
Good episode. Hopefully,
Couple good tech names.
Yeah, great tech names. And hopefully we survive the next week of sub-zero temperatures in Chicago, so we can see you guys another time.